Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. As always, folks, we're going to focus on the charts. No BS, no hype, no narratives. It is what it is. It is in the charts. All right. So, first and foremost, we're going into today following yesterday's big news of a European framework for a trade deal. Notice how the markets opened higher yesterday, but then lost their gains. NASDAQ still closed slightly higher on tech strength in the semiconductors, but the S&P actually closed flat on the day. And again, little signals like that are just things that over time in 26 years of trading, I've kind of grown to pick up on these little bit of signals. In addition, I noticed yesterday the VIX was inching up just a little bit. The VIX is the fear index. And you might say, well, markets were flattish on the day. Why did the VIX inch up? That's precisely what you want to say. Why are institutions buying protection in this market environment where it seems like the markets go up every single day? And that's something that I've also learned over the history of my trading is that you watch the VIX. Once it gets around 15 or below, look for where it doesn't make sense on the movement. So where does the VIX start to go up, but the price action in the market is still stable on the day? All right, let's get right into the charts here today. Flipping over to the S&P futures, we have an S&P that is up on the day from yesterday's close. This is where we closed yesterday right here. So again, you can see we are up overnight. We were trending up. We are starting to curl over just a little bit. One of the big things that I found here, folks, and this is something that you have to pay attention to. Notice how we're getting earnings out now. We're in the height of earnings season. And notice how earnings are generally pretty darn good, but stocks are going lower that are reporting. And today is no different. There's very few stocks that are up on earnings. Today was a deluge of earnings. Again, we had UNH, SoFi, PayPal, Boeing, Spotify, UPS, Merck, even Novo Nordisk reported a guidance cut. And that is taking the stock down massively. And again, the markets here, you can have it continue to go up on animal spirits. But again, you're seeing more and more cracks emerge. And these are just signals. Doesn't mean the markets are going to turn around on a dime, but they are signals to be careful. Just remember, whether it's a week or a month, that you got to be aware of these signals. That's what I've learned over my trading career. So again, S&P futures are up on the day, not a ton. Yesterday, we closed around 64.23. The futures are trading at 64.34. So about 11 points higher right now on the ES futures. Let's flip over to the daily chart of the S&P and take a look. And this is something that, again, I showed yesterday. We have multiple trend lines. Here's one of these wedge patterns, the lowest point here on the chart from April through this. We broke right here, and the markets have still floated higher. But as I've said, this is kind of where the markets are at a point where they're still going up on these animal spirits, retail buying in a frenzy. But the weaker moves, look at how tiny these candles are. It's just kind of a slow grind of, 0.1% to 0.25% a day, with a couple flat days in there. But also you're not seeing institutional buying. The volume has dried up. And again, you have all these levels right above that, again, create a wall of resistance. And again, please understand, by no means does it mean that we have to go down this second, this day. It, again, is more of these alert signals that I pay attention to that, again, if you look historically at these type of patterns, and remember, that's what technical analysis is. It's looking at a chart and looking historically at charts across the board and saying, when this pattern forms, when this happens, the odds favor X, Y, or Z. And that's, again, what we do here is it's not about my personal beliefs or your personal beliefs or, what the animal spirits are telling us to do, which is dump all our money in and leverage to the hilt in this environment because the markets seem like they can't go down. It's, wait a minute. When this has happened historically, what has been the ultimate outcome? Whether it's a day from now, a week, or a month from now, what has been that outcome? And that's what I try to go by, because honestly, anytime I listen to my personal feelings, that's where I get myself in trouble. It's more about slowly looking at the signs and putting myself in a position based on probability, aka the charts. All right, so again, what we're seeing here on the S&P, we're looking at a lot of resistance here. Markets still, again, they could grind up a little bit, but we are right into that point, and we're also below all the major trend lines, which create risk. The dollar continues to surge today. Here's the DXY. The dollar now is piercing this short-term high pivot. Now, notice how, again, you had a high, lower high, lower high, lower high, lower high. This is the first time in basically multiple months, we have had a higher high in the dollar. And again, that's just something that I'm saying, okay, again, is it a huge deal? No, but it is something that I'm paying attention to because, like we talked about just a second ago, these are little drops of breadcrumbs that, again, could tell us about further strength in the dollar. Maybe not today, right? Maybe it stalls, but just the mere fact that here was a high and you're making a higher high is a short-term relative bullish signal. Whether we consolidate and pull back and then go higher, we'll have to watch. But again, something just interesting, piquing my interest in the US dollar here. And again, strong on the day. Now, granted, let's be fair. Why could the dollar be strong? Probably because the markets don't think the Fed is going to be too dovish tomorrow when they release their FOMC statement. Because, again, the economic data, the markets are assuming it's going to be reasonably good this week. Remember, non-farm payrolls. We have all this other stuff coming out this week, PCE inflation data as well. And so there are little things like that that probably are contributing to the relative strength. Plus, let's be fair, a European trade deal. We have a Japanese trade deal. So these type of things are firming up that the U.S. may not be totally out of kilter with the rest of the world. And maybe that dollar, king dollar, can remain king dollar for a short amount of time. Now, if you're like me, you kind of overall think that the dollar will slowly degrade over time, whether it's the U.S. debt, whether it's the policies, whatever that may be. But at least in the short term, the dollar is showing relative strength. All right, next up, let's take a look here. The 10-year yield is down a little bit on the day here, so coming in. But keep in mind that the 10-year yield is still stuck in this bigger wedge pattern. Yesterday, I talked about what a wedge pattern is and what it can entail, so I'm not going to do that again today. We have a ton of earnings, guys. Let's start with Whirlpool. Whirlpool, bad earnings here. And again, keep in mind, this is a staple, right? So if you're a homeowner or looking to buy a home, you're probably buying a washer and dryer. You're probably buying all this other stuff. So why is this weakening? Could it be that the housing market is really suffering? Could it be that these big purchases of washers and dryers, $1,000 appliances, now the consumer is starting to be stretched? I would check all of the above on my card, and I think all of that is coming to fruition here. And that, to me, listen, when consumers are still willing to go out to dinner for $100, okay, I get that. That's still a purchase. It's a reasonable purchase, meaning that it's not going to strap people totally with cash. But again, these bigger purchases can be signs of an underlying problem in the system. And I think Whirlpool could be telling us that. All right, so let's talk a little bit about the daily chart here. The daily chart, big gap down, guys, 15 to 20% drop on Whirlpool. Again, on a pre-market basis, we were down as much as $80 per share. So we start at $80 right down here. There is a little bit of support at a Pierce of 80. So I'm going to keep my eye on that pre-market. If you just want to take a look here, look at this. So see right over here, draw that across right through here and right through there. So just below 80, there is technical support. Following that, you're going to have a good zone of support from these lows all the way down to the double bottom, right? So we can stretch this out here nicely right out here. So again, first support, which would be very aggressive as a day trade, would be a Pierce of $80. And then second support, which would be very solid support between 76 and 74, a huge area of major technical support. Now let's talk about this chart here, guys. This is Royal Caribbean dropping about 6% and change on earnings. Now the kicker is this. Their earnings beat. Their revenue did miss by just a fraction. But again, this is where a chart like this you have to keep an eye on. And this is one of those things where I talk to you guys about looking at the chart ahead of an earnings report. If it's vertical up and to the right of the chart, you want to be more careful because even if a company does well on earnings, the chart is priced for essentially perfection. And if they don't come out perfectly, then that stock is going to most likely drop. And that's honestly what we're seeing here in Royal Caribbean. It was just ever so slightly a miss on the revenue, which again, when you look at this, look at the run this stock has had from April lows to the close yesterday, 115%. That rivals tech stocks. That rivals the best AI stocks and what they've gained during that period. And so the question is basically Royal Caribbean and the cruise lines Are they like worthy of AI valuation type runs? Because the forward PE is about 25 on this stock. That rivals like Microsoft and some of these other names out there like Meta. In my opinion, historically, Royal Caribbean and the cruise lines have been more priced with the airline stocks, the travel stocks, right? And so this to me has gotten way out of whack. I'm not surprised to see a downside move. And I would say you're looking at, even though it's only trading at 329, there's a day tradable level around 319. But I think this is going much, much lower overall with this chink in the armor. So if we look at a technical level here, this to me becomes a swing trade bounce play, not until 274. If you're aggressive, the 319 level would be a day trade today, but on a swing basis, the former high and this gap fill right here would now become a swing trade potential support. All right, on to NVO. Take a look at this drop, guys. 20% decline on Novo Nordisk, the maker of the weight loss drug Wegovy. Remember when this and Eli Lilly were king of the hill? They were pricing, they were just going up nonstop. Well, that is a far cry from where things are. This traded as low as $49.50 pre-market. It's back to about 54. But again, on a basis, this is actually looking very interesting as a swing trade. Look at this zone right here, guys. So again, if we go down here, we have to go down sub 50. See these lows right here? This to me is looking very interesting. Anywhere between this 47 and basically $46 level, that to me is becoming a buy. But look at this. The stock was $150 going back to June, just over 1 year ago on the weight loss craze. And it is now potentially approaching basically a 52-week low here, going back to a low not seen since September of 2022. Notice this was the beginning of the big bull run up. Therefore, this pivot low should act as a great swing trading opportunity. This one I will be looking at myself for a swing trade. Again, $47 to $46 per share on NVO. Spotify getting hit here. This is a stock that I have with Smart Money Smart Money Stocks members in the service. We are in the money. We were in the money going into this report. We're even deeper in the money, almost up 10% on this. Great fall here. And again, another chart that was basically vertical. Look at this move. Vertical. Now it had come off into earnings, but obviously not enough. The level today to watch for a day trade for me is going to be right here. See this pivot point right here at 617, and then there's a gap fill at 602. Those will be two key levels. On a swing trade basis, I'm not going to go near this most likely until, let's see what level here. So maybe at 560 to 565, longer term trend line right there. Pivot lows across the board there, and that would be around 560 to 565. Maybe you get a swing trade bounce there, but a day trade bounce right in this vicinity. And again, good fall on this. Notice how almost all these companies, in fact, everyone I've gone over, folks, is down on the day. And again, it's not that their earnings are horrendous. It's not like, oh my gosh, their businesses are crumbling. It's that these stocks have gotten too far ahead of their skis. They've gone way too far forward. They have to take essentially, they've gone 5 steps forward. They now have to take 2 steps back. And again, this is just something that naturally occurs in markets when you have retail pushing stocks up like this nonstop. They get out of kilter with the fundamentals. And the charts, obviously, the negative divergences were galore. I mean, RSI negative divergences left and right, folks. All right, back to the charts we go. Let's go to the next one here. How about SoFi? SoFi is one of the rare ones that's up. Now, I had to chuckle on this, and you might say, well, why is Gareth chuckling when SoFi is up? Because what does SoFi do? It's basically in this subprime finance buy now, pay later group. Why are buy now, pay later companies doing better? That's kind of interesting. What does that tell us about the state of the U.S. consumer? I think I'm being obviously facetious here. I think we can all jump to that conclusion pretty obviously. But listen, the stock's up regardless, and we'll trade it. But again, breadcrumbs, folks. Always remember breadcrumbs. What is it telling us about the long-term kind of, viability of the U.S. consumer? So the stock is trading at $23.17. If we zoom out, the only level I will be focusing on, well, there's a couple levels, but it's all in the same zone. It'll be this zone right here. So basically between $24.60 and $25, This zone right here will be resistance. If it gets through there, you're looking at around the 28 and a quarter level. But right here, great shortable intraday trading opportunity. And again, that will be on my radar for the live day trading room members today. Back to stocks that are going down. All right, UNH back down. This stock has had a lot of trouble. They're under investigation by the DOJ, lots of stuff like that. The stock is down. The only level to watch on this for a day trade, and I will be looking at it, will be around a 250 Pierce double bottom. It's at 267 right now, so it's not unheard of that it could just drop another 17. It's a $267 stock. So again, watch the double bottom here. This was a beautiful bottoming tail on the daily chart. It should act as technical support. Next up, we have one stock that is up, but this one, guys, I'm going to tell you this. Boeing is up slightly on earnings. I would love for it to trade just a little bit higher into a gap fill here. There's a gap fill at 249 to 250, and even right here. But this would be one where sometimes these companies have good earnings and they open higher, and then by the end of the day, they are negative. And again, listen, I don't know for sure if that'll happen on Boeing, but the stock has had an impressive run, especially if it gets up to here. Boeing becomes a strong, even swing trade short at gap fill 249 to 250. But again, this would be one that maybe pops early in the day and then goes negative by day's end, considering how extended the move is. The question is, does it just need to fill the gap real quick? Other stocks with earnings today, Merck. Merck is trading down here. Again, trading down to 80.60. You can see I formally annotated this chart. We can move the arrow here, pointing out where the support would be. The support's actually a little bit lower now. Here, if we look at this, around $75.85. So that would be a retrace to the scene of the crime right here. Huge opportunity right there, guys, as technical support. Notice going into earnings, it had a little double top right there and getting rejected. The stock trading at $80 pre-market. PayPal reported earnings. That stock initially, you could see, initially popped up a little and now is getting smoked. Again, trading down. Look at all these stocks trading down, folks. Amazing. First support level on this will be around $71.30 to $71, followed by 68 right down here. And then if we take a look here, let's see what else reported. UPS reported. This is another good gauge of, obviously, the economic activity. And this stock, again, is down slightly on earnings as well. Procter & Gamble reported. That stock's inching up a little bit. Not a big mover overall. JetBlue, let's take a look at JetBlue. JetBlue's up. JetBlue's been beaten down, though. If you look at JetBlue on the chart, look at how low it is historically on the chart. That stock, again, only up slightly on earnings. All right, so there's some other earnings, guys, but let's be fair. I'll cover those in future. Again, really, there's nothing other major. And listen, earnings later this week, what do we have? We have Meta. We have Amazon, we have Apple, we have Microsoft and Meta tomorrow after the close, PCE data later this week, the jobs report later this week, the Fed decision tomorrow. Again, hold on to your hats, guys. This is going to be big. Okay, going back to the charts, I'm not going to forget about Bitcoin. Obviously, I know all of you guys, or at least a lot of you guys, want to know about Bitcoin. I would love to give you new information here. There's nothing new here. Bitcoin's up fractionally on the day. It is just staying sideways. Now, again, generally, bear flags, you should have seen a breakdown already. So again, does it raise the possibility that it could fail? It does. The probabilities, remember, every single candle, and this is what a true technician understands, is that every time you get a new candle, whether it's a 10-minute chart, a 15, a 30, an hourly, a daily, a weekly, a monthly, every chart, every new candle you get changes probabilities. It might be a slight change. It might be a big change. When you're looking at a chart with a bear flags kind of work on time counts, and this has gone past its time count. And so it doesn't mean the pattern doesn't have viability anymore. What it means is the probabilities begin to shift slightly. So when it was over here, it was like, okay, this is a hugely bearish signal. It tried to break down. It didn't. And now it's kind of still a bearish signal, but slightly less. It's getting closer to the 50-50 marker. And so again, for those of you that are bullish out there, this is what you want to see. You want to see the pattern not be able to break down, and eventually, essentially, the bulls can come back in. Now, again, just putting probabilities on it, it probably over here was around a 70% chance of a breakdown. When it did this and then got back in, it's kind of gone to about a 60 to 55%. So it still favors it slightly, but not to the extent that it did just a week ago or a few days ago. All right, so still on point there. We'll continue to monitor that, and of course, I will keep you updated. Here's your gold chart getting a little bit of a bounce. Obviously, we had the gold breakdown. So again, 1, 2, 3, 4 down days. Not surprising to see a small bid today, but this is a very crisp, confirmed breakdown now. And so this trend line here becomes major resistance. It's also joining forces with this downsloping trend line. So on any bounces, you'd expect further downside near term on gold. But remember, long term, I still think upside is in the cards. All right, looking at silver here. Silver, again, not doing much. Respect the resistance up here. Here's your support at 37.16. Resistance remains around 39.35. U.S. oil, let's take a look there. It's trying to creep back in this level, in this trend line of the bear flag to get back above and negate. Remember, it has to close and then confirm above to negate because it confirmed below. And so again, just with a little uptick today, it doesn't get me too excited about any sort of negation on oil of the bear flag. And then lastly, natural gas real quick here, guys. Nat gas just bear flagging here below. Again, hasn't confirmed below. So again, that's something interesting. But nonetheless, it is bear flagging, which adds a little bit of bearishness with downside only to 299 before the next support would be hit. All right, guys. So again, listen, lots to cover. When we get in the heat of earnings season, these are fast and furious. I'm going to give you guys levels quickly, not going to waste much time talking about much else. Again, trading is what I do. It's what I live for. It's what I love. I know a lot of you guys feel the same. And I love that I can give you guys direct kind of probability levels, right? And that's the key. Following the charts, no BS, narratives, hype, leave it at the door. Again, I may love a stock. It doesn't mean I'm not going to be bearish in the near term on it if it's gone up too much. And again, that's where you differentiate your personal bias from what the charts are. There's nothing wrong with thinking a stock can pull back. Most people always are like, oh, I just wanted to go straight up forever. That's not viable. It's never going to happen. Nothing goes straight up forever. And so you have to be understanding that there's certain chart signals that will tell you a pullback is likely. Okay, so let it pull back. You can either use it to buy more, you can short into it, whatever you want, you can make more money. That's what the big boys do. I'm here to unveil that, to give you guys the same information that the Goldman Sachs, the BlackRocks are using to make billions of dollars. You guys do what you want with it. I'm going to give it to you guys. You guys are awesome, and I thank you guys for tuning in. You guys have a great one. I'll talk to you soon.